The UK mentality broadly is if you buy a house, that's a great. I mean, there's a lot of people still, their pension plan is their property, which is completely crazy. The system now is in a place where doing the traditional things probably won't be enough to really protect your store of value. Once someone has seen what Bitcoin is and what Bitcoin can do, there are probably more routes to you accessing more money within your current setup than you probably think you have. Someone who has been invested time, energy, and put research into understanding Bitcoin and thinking, oh, I've got this asset, I've got this house, but I can't, I'd love to be able to divest some of this house to buy some Bitcoin. Things like that are open to them. If you want to be financially free and financially secure and stop working or reduce your hours at an age and at a time where it suits you, then Bitcoin is a great way to do that, I think.
What did you do in traditional finance?
Yeah, so I'm a qualified management accountant, chartered management accountant, and I've spent my whole career and still continue actually to be employed in commercial organisations, data analytics, financial analysis, all that kind of traditional stuff. So I've never been a bank in the banking side or any of those elements, but I've always had an interest in numbers, an interest in finance, and a passion about personal finance too, particularly trying to help friends, colleagues, family members kind of find their way through some of the complexities of their own personal finance situations.
Interesting, yeah. And then it's like helping people with personal finance. I've discovered that most want to learn like, how to pick stocks and stuff like that, but they actually want to learn, okay, how do I preserve my wealth? And they're trying to go fancy with it, and they're not going with the easy solution and finding a savings thing, which is super interesting. What have you learned from talking with people about their financial interests and their kind of financial strategies that they are having?
I think a lot of people follow the traditional route. Go to university, come out in debt, get a job, get a mortgage, try and pay off your mortgage, get married, have kids, hope you've got enough in your pension. And for previous generations, I think that's worked well. I'm a lot older than you. I'm kind of late 40s. I'm probably, I've broadly, to a large part of my life, I've followed that path. And so far it's been working okay for me. But I think for the generations to come, I don't think that approach will work because the system now is in a place where doing the traditional things probably won't be enough to really protect your store of value, the wealth that you create, to really make sure that you can grow that to sustain a future that you're hoping to achieve.
Yeah, it's super interesting when we see that Bitcoin actually broke that traditional model of 60-40 portfolios, or like having ETFs and all like that. I even was on that journey where I had stocks and I was like planning to go into real estate to diversify. And then came Bitcoin and I was like, okay, I have to go all in. I mean, that transition took some years, but so I think it continues to suck in the financial energy. And you said something really interesting in the preparation. You said like we have to look at the different age brackets of Bitcoiners and have different approaches. What do you mean with that?
Yeah, I think there's a lot of when you see things like stay humble, stack sats. It's a solid meme within the Bitcoin space, and it comes from the point of having a longer time horizon. Don't just seek quick gains to buy flash cars, etc. And I think for younger people, so I'm talking, maybe, for example, my daughter's 17, 18. As much as she's not really interested in Bitcoin, I try not to push it too hard, but at the moment she's not that interested. But for that kind of age group, putting a small amount aside regularly could help to create generational wealth in years to come. I think when you then get to someone in their maybe 30s with starting a family, they'll have so many other pressures on their financial they have so many financial demands on the money that they earn that it's probably harder to find money to put aside, because they've got to pay the mortgage, pay the electricity, childcare, whatever it may be. So the younger person might have less money available to them, but if they're still living at home and they don't have the outgoings, arguably they could potentially, tuck away more than someone in their 30s. You then get to someone in their maybe 40s, 50s. So someone like me, and I'm quite happy to share. I'm in the process of selling a buy-to-let that I had, because the interest rates on the mortgage are going up. It's due, the mortgage is expiring, and it just becomes uneconomical, especially with tax, to actually own the thing. And it's not a passive income, because when you have a month without a tenant, and when you have a boiler that needs replacing, all of these things are costs that eat away at the return you make. And I think my generation has the opportunity to divest in things like, if you're invested in bonds, if you've got an ISA that's investing in the stock market, I've got the potential, or my generation maybe more so, has got the potential to say, I'm not going to stay humble and stack sats. I'm going to make more radical changes and make bigger purchases, which is obviously something a teenager or an early teen can't do. But I think that solitary message of stay humble, stack sats, and just keep building up your stack, I think sometimes needs a little bit more nuance to it.
Yes, there's so much already in there. The passive income side, I sometimes get a little mad when people are, I have passive income. Like, what does this mean? There is no passive income. You have to build something up, and maybe it runs without you because you have built a management team around it, or you build something around that. And especially with real estate, I live in a fairly easy to manage small apartment, and I have problems probably every 4 months, where I just make pictures of it and send it to my landlord, and then he goes ahead and fixes it. And that's great, because I can make a picture and send it to him, and he's responsible to fix it. So I know it's not passive. Yes, you can hire someone to do it, but then you have to manage the one that you're hiring, and then it's just a business. It's the same with any business. So seeing real estate as passive income is, I think, a foolish idea.
Well, I think the other thing with real estate, even if you ignore the buy-to-let investment side of it, I think particularly, I'm in the UK. The UK mentality broadly is, if you buy a house, that's there's a lot of people still, their pension plan is their property, which is completely crazy, because where are you going to live? Okay, you can downsize. If you're mortgage free and you downsize, you free up some equity from selling your property and buying a smaller property. So move from a 3-4 bedroom house to a 2-bedroom flat. But are you going to want to do that? And is that you're putting all your eggs in a property basket, whereas actually that's probably not the best thing for you to do.
And there are so many examples of where a neighborhood got bad because of politics, because of something else, and then you're losing. So even if you say, oh, a house is a safe investment, no, it's not. you have a lot of risks that you just don't aware of. And also, I think you mentioned it, because of taxes. I've seen discussions in politics a lot, and taxes on real estate is one that usually comes up the quickest, because they cannot move that property out of the country. They can move a company out of the country. They can move Bitcoin out of the country. They can move other things out of the country. But real estate is easy to tax, because people mostly don't move out and take all of the sudden their real estate out, especially if they have built this running system with management team above it and stuff like that.
Yeah, and even with your own home, there's a lot of personal, the perception that people have of you is tied up in property for a lot of people. So people aspire to buy a bigger, nicer house with a nicer car on the drive, and all of the traditional fiat mindset. Whereas Bitcoin, I think, does make you think less materialistically and with a longer time frame. And, if you keep buying and aspiring to bigger houses, better cars, that tax element comes in again. I mean, again, I don't know the tax setup in every country, but generally in the UK, the bigger your house is, the more council tax you have to pay every month. you're still getting your bin collected. You're still getting police on the streets. You're still supporting, care homes for the elderly in your area, but you're paying twice as much as someone who's got a house that's half the size of yours. So all of those things are still entrenched in those decisions you're making that effectively are tying up so much of the money you're earning, and meaning that you're having to seek promotions and pay rises just to keep that wheel turning.
It's super interesting. For me, when I look at accountants, I have an aunt that is actually an accountant, and she was in a company just for 2-3 months. and I talked with her, and she's like, "Oh, like that company looks so bad in the books." And she's like, "Hey, don't tell," but like I look at it and it's so bad. And then fairly enough, half a year later, the company was bankrupt. So it's always interesting, because I think accountants see a lot of bad management, see a lot of also personal finances, depending on if the accountant is doing it for companies or like for individuals and stuff like that. So I'm fairly certain that you probably have seen already some financial mistakes alongside in your career.
Yeah, I think as well, bringing it more to individuals rather than companies, I think it's not always mistakes that people make. I just think sometimes people don't realize the opportunities they've got to make better decisions. So, and I think I'll give you one example. I pay interest only on my mortgage. The reason I do that is because rather than paying off the loan, the mortgage loan, it allows me to put that money either into buying more Bitcoin or putting it into my pension when I get a tax benefit back from the government because I've contributed to my pension. So the traditional mindset is, I've got a house worth £500,000. I want to pay off that £200,000 mortgage as quickly as I can. So that house is all mine. But actually, if the interest on that loan is 5%, then if you can do something with the money that you're paying off that £200,000 with, that is going to earn you more than 5%, surely, well, it stands to reason that's a better use of those funds. I did a quick, I'm not going to get bogged down in numbers, but I did a quick calculation. If you've got a £200,000 mortgage, which in the UK is a typical size of the mortgage, over 25 years at 5% interest, then you're paying £1,200 a month. Of that, £800 is just paying interest to the bank for their rewarding them for clicking a number in their spreadsheet and transferring that to you, and they're earning their £800 a month. £400 a month is going to paying off that £200,000 loan that you've got from them. But imagine if you could put £400 a month for 25 years into Bitcoin. I didn't even try and do a Michael Saylor and do the calculations on it, but it would be probably it would go beyond millions probably. So it is a genuine choice I think people have, but it's a hard choice to make because all of traditional mindsets and finance says you need to pay off your mortgage. You need to pay off your mortgage. You don't want debt. But yeah, there are alternatives to that. And I think sometimes once someone has seen what Bitcoin is and what Bitcoin can do, there are probably more routes to you accessing more money within your current setup than you probably think you have.
There's an interesting topic in here because debt, I think, is within the Bitcoin community almost controversial, I discovered. And there's this group that says like, oh, there's good debt and bad debt. And then there's this group that says like, oh, like there's no place for debt in a Bitcoin world. How do you look at that?
I think you can be very purist and say in the future we don't want debt, we just want Bitcoin. I don't. I have some agreement with that view. However, the reality right now is fiat is being printed at a rate no one's ever seen. It's being devalued. You can borrow it relatively cheaply against the rate that we would all believe you would get as growth in Bitcoin over the same period of time. So for me personally, if I have debt against an asset like my home, I'm completely comfortable with that. I still believe my home will grow faster than the interest that I've got accruing against it. And it gives me more opportunities to do other things. I think if you're getting in debt to leverage up to buy Bitcoin or to buy fast cars, have holidays, in the hope that let's say someone says, I don't care, I'm going to put £10,000 on my credit card for a holiday because I've got an amount of Bitcoin here, and by the time I have to repay that in a year's time, the Bitcoin will be paying for it for me. That's completely the wrong mindset of what debt is. But my view is if you can manage it properly, if you've got the right mindset for how you're going to use that sensible level of debt against assets, not against just frivolous spending, to allow you to increase your holding in Bitcoin, then I think for the right person, that's a very positive thing to do.
Yeah, I also think so. I mean, we have the most famous example of Michael Saylor using the fiat. I always call it the fiat games to get more Bitcoin. What he does is probably not possible for any individual, but it opens up the possibility of like, okay, if you have a mortgage on your house, maybe maybe you can even buy Bitcoin with that. I've never got into that. How do you look at actually how's it called, loaning against the Bitcoin, no, borrowing against the Bitcoin?
Yeah, so just to go back to what you're saying about the mortgage, if let's say someone listening to this is in their 40s or whatever age they are, and they're thinking, well, I've paid off my mortgage and my house is worth insert a number, it doesn't matter. That person could go to the bank and say, I would like to borrow against my property. They would give them a mortgage, and they can say, within reason, they can say it's for house improvements or whatever. The bank won't be too worried because they'll be securing, let's make a number up, they'll be securing 50,000 euros against a €500,000 house and saying, that's fine. We're not worried. If you don't pay, we'll take your house and we'll get our 50,000 euros back. But that person could take the view that I'm going to take 50,000 as a mortgage against my property now. The payments every month will be relatively low, but it gives me an opportunity now to buy 50,000 euros worth of Bitcoin. Now, none of this is financial advice. Let's be really, really clear on that. This is not financial advice, but someone who has invested time, energy, and put research into understanding Bitcoin and thinking, I've got this asset, I've got this house, but I can't, I'd love to be able to divest some of this house to buy some Bitcoin. Things like that are open to them. It's just switching your mindset around slightly to think, well, how could I, as you said, Saylor is great at doing that. If you've got 4 chairs, you only need 1 chair, sell 3 chairs. It's a bit of an extreme example, but, someone who has got assets, if they believe Bitcoin is a superior form of wealth generation and preservation, then they probably got more options than they think to try and access that.
I brought that meme up once on Twitter, but when I have been to Michael's house for the 100K party, and there are more than 10 shares that I counted.
I reckon he's probably got 2 yachts as well, but yeah.
But that's another discussion. So he's not selling all his shares. But that's a super interesting thing of like we can use that to buy Bitcoin. How do you look now at the other thing, the borrowing against the Bitcoin?
I think as a basic principle, it depends what you are going to use that money for. If you're in your 60s and you're going to use it for facilitating earlier retirement and thinking, well, I could sell my Bitcoin now because I need some money, but if I borrow against it and the Bitcoin keeps going up, like I believe it will, faster than the interest that I'm having to pay for the loan that I'm borrowing against it, it makes financial sense. If someone in their 20s is going to use leverage to borrow against their Bitcoin to buy more Bitcoin, to then leverage against their Bitcoin to buy more Bitcoin, and to get greedy with trying to just get more coins, it could be successful. If you did that 12 months ago, you'd be sitting on some nice gains now. But we all know how volatile Bitcoin has been and is likely to continue to be. So any kind of borrowing that has the ability to take those Bitcoin away from you is a risky strategy. And I think it's, for most people, it's probably best avoided.
It's the psychology behind holding and buying Bitcoin is really hard. I saw it with myself, and I saw it with a lot of other Bitcoiners. You're always trying to be fancy with it. You're like, okay, what if I buy that altcoin and get more Bitcoin in the bull run? What if I borrow against it? What if I get certain debts? Just sitting on your stack seems to be the hardest thing that humankind can do.
I think it's because most people are still maybe partly in disbelief about just doing that, just keeping hold of your Bitcoin and trying to build on the number of sats that you have is the best approach. And anything else is quite TradFi, is quite fiat mindset. You know, the reason we don't all just keep hold of our cash is because we know it's being deflate. You know, it's becoming less valuable over time because of money printing and inflation. So we have to buy stocks, buy shares, invest in property, whatever, you know, we're going to do with it. But Bitcoin doesn't need that. Bitcoin just needs to sit still, be left alone, and it will do its thing over time.
And it's so hard for people. There are a lot of Bitcoiners that even then try a weighted DCA and try to like buy more when it's lower and buy higher. I mean, it can be a really good strategy. But I found, especially now in the last like 1 to 2 years, it's so freeing if you just buy Bitcoin with the money that you have left over. So like I'm maybe a special case because I'm 100% on Bitcoin, and I just buy Bitcoin with whatever I don't need. And now I also earn in Bitcoin. So I actually now have to sell some Bitcoin here and there, and just like buy the top forever and buy the low forever and buy also the medium things, whatever the price is, and just write that out and use Bitcoin basically as my savings vehicle, which is extremely freeing because now I can focus on what I want to do. And a lot of people haven't discovered that yet.
Yeah, I agree. And I also think everyone is different, and people's individual ability to handle volatility and risk and the level of adrenaline they get from making some of those decisions can influence the approach they take. So completely agree. If people try and time their buys and think, right, we're now in the depths of a bear market, I'm going to go on a platform like Ledden, which, full disclosure, I have used in the past, and I have benefited from borrowing against my Bitcoin to buy more Bitcoin that got me more Bitcoin. But, you know, if you're confident we're close to the bottom of a bear market, then it is quite a smart thing to do, but it does come with risk. And I think the biggest risk is if someone makes decisions like that and then gets liquidated, they may turn their back on Bitcoin altogether, which is the biggest risk you can probably make. So I think if someone's sitting on a pile of money in their bank account and thinking, I'm not going to dollar cost average, I'm not going to smash buy everything, I'm going to try and be a bit clever and time the market, the worst case is suddenly Bitcoin shoots up and they've got a choice to make. They're sitting on cash that they could have put in but didn't. Do they just swallow their pride and buy at a higher price, or do they stay on their cash? Again, it's an individual thing. It's up to them. Some people just find, and it sounds like you're in that place now. I'm pretty much in that place, which is when I have available cash to invest, I'll buy Bitcoin, regardless of the price, whether it was 80, 90, 108, doesn't really matter in the grand scheme of things, because I'm not selling it anytime soon. And I'm confident that in 3, 5, 10 years time, whether I bought at 80, 90 or 100 will be fairly immaterial in the grand scheme of things.
Yeah, that's a good point of like, if you remember back in 2000, what is it, 10 year 2015, and you look at the price range there between the year, how much of a difference does it actually make if you make the high of 2015 or the low of 2015? Like you've done well over the last 10 years. And the same thing probably is true for the next 10 years.
Well, even closer than that, Robin, even if you think to sort of late 2022, early 2023, there were some people waiting for, was it 15K that never quite came. And so some of those people are still sitting on their cash hoping that 15K comes. It would hover between 16, 17, 18, 20, 18, but if at that time you're thinking, no, I'm going to wait for 15 and it doesn't come, well, you've now missed out on 5 times growth on what you could have bought at 17, 18, because you were, arguably being greedy, waiting for a bigger dip to come that didn't ever come. And even if it had gone to 15 and you'd bought some, you're not that much further ahead than if you just bought it at 17 anyway, because the scale of the growth is so much. So if you think now it will be let's say in 5 years' time, you think it will be $1 million, do you really care if you spend that 500 euros, 1,000 euros at $88,000 or $110,000? It won't make a massive difference, especially if the risk is you sit on your hands waiting for something that doesn't arrive, and then you've missed out altogether.
There are two big things with people that don't have. I'm trying to avoid calling non-Bitcoiners like no coiners or normies, because I think they're just on the path also to discovering Bitcoin, and I don't want to call them something demeaning. But when we call them people that haven't discovered Bitcoin yet, then we have two psychology things that goes on. There's first of all, the group that just doesn't want Bitcoin because of some made-up reason, like environment or any other FUD. But then there are people that are interested in Bitcoin, and they're saying, no, it's too high. I wait till XYZ. It was 15K one day. It was maybe even 70K one day. It was maybe more 5K one day. Maybe it was $100 one day of people that it's now $300. I'll wait till it's $100. Then it never crashed down to $100, and now it's at $100,000. So there's that side of things, but then there's also the side of things. Once it gets going and it reaches new all-time high, a lot of people pile in. I mean, this meme. I just I can quickly show it to you. That is probably known to almost every Bitcoiner. And it's super interesting to see that meme progressing, because it's here it was $9,000 and 20,000. Then here we have 33 and 64. And now we have the same meme with 80K and 110K. So it keeps progressing upwards. So that's really interesting. The psychology of, first, I'm waiting for it to go a little bit lower, then they never buy if it goes lower. And then once it's really out of control and reaches the new all-time high, all of a sudden everyone wants to pile in. So it feels like people are really emotionally stupid with financial decisions.
I think a lot of it is if the people who don't currently have Bitcoin think, I can buy it at 80 and then sell it at 110 and I'll make a quick return, they're effectively trying to use Bitcoin as a form of gambling or speculation, which everyone has the right to do. Yeah. However, you may not get the luck. It may never go to 80, and so you miss out on that opportunity. If it does go from 80 to 110 and you sell, then what are you going to do with that money anyway? I think the further you go, you do your research, you increase your conviction to buying Bitcoin, those kind of relatively small movement. I mean, it sounds crazy to talk about 20,000, 30,000 movements in the price of one Bitcoin being small movements, but in the history of type of Bitcoin, those percentages are not uncommon. So, I think once you've got your head round This isn't speculation. This isn't gambling. This isn't me putting some money in to make more fiat, to buy more things in my life. This is an opportunity for me to, when I have money available, buy in the best performing asset and the scarcest asset the world has ever seen. And I'm fairly ambivalent about the price. I think the only thing maybe was, let's say Bitcoin rockets up to 1,000 tonight and I get paid my salary next week. I probably wouldn't buy in at that level right now, because I think that feels quite inflated. It's probably going to come back down again at some point. And I could live with that. I've invested enough of what I have now that if it kept going up, but I was sat on an amount of money that I could have bought at 250, but now it's $1 million, that's fine. I can still sleep at night. But other than really big swings like that, for me, it's just when you have the money available, if you've still got your conviction, just keep plugging away, keep stacking those sats, as the meme goes.
Let's take a break for a moment and appreciate the beauty that Coin Vigilante has made with the Bitcoin watches. Those watches are the most amazing, the most elegant way of showing that you are a true Bitcoiner. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. And now, if you have Bitcoin, I really do hope that you don't have it on exchange. But if you do have it on exchange, I have two ways for you to deal with that. The first way is you put it on a hardware wallet. That's the entry for you to get into the self-custody game. I recommend BitBox, Bitcoin only edition, for that. It's a super simple and secure way. And if you check out the link in the description, you even get 5% off if you use the code Robin. And the second way is the Bitcoin Way. The Bitcoin Way is your all-in partner in terms of how to get the most out of your sovereignty. They will personalize for you a self-custody setup that is perfect for your individual situation. They will show you how you can secure your own devices. Securing your Bitcoin is not enough. You also have to keep all your devices secure. One topic that is overlooked often is the inheritance plan. What happens with your Bitcoin once you are no longer here? Do you have a plan for that in place already? And last but not least, if you're in jurisdictions where you don't feel safe, it's better to get a plan B. For all that, head over to thebitcoinway.com/Robin to get a 30-minute free call. And just a quick side note, I will be for the first time ever speaking at the Bitcoin Prague event in June. It will be absolutely legendary and I'm really looking forward to seeing all of you there. You can get your ticket in the link down in the description of Bitcoin Prague, and very important, use code Robin to get 10% off your ticket. I'm really looking forward seeing you there. We look at, and I'm curious how this affected you. When we look at my life, how Bitcoin affected my financial decision is basically not putting so much effort on finding a new stock, what I did before, and like trying to time things and like trying to almost like medium-term trading. I remember I went into stocks and out of stocks within like 6 months. I was never a day trader, but like I paid a lot of attention to the stock market. And from the outside, I was actually successful with it because like the whole market was going up and whatever you did, you made money. So you're not a genius by doing that. But Bitcoin came in my life, now full focus. I don't ask myself the question now 5, 10, 20 hours a week of like, oh, where do I put my money? No, that question is clear. Those 20 hours are now either spent productive or on the family or girlfriend or whatever, but not on the question, where do I put my money? I probably something similar happened with you, I guess. And the bigger question that I have is, how do you think Bitcoin, if at all, will change financial behaviors if we actually come to global agreement that Bitcoin is the savings vehicle that we all should save in, and people then have a very great option if they want to save in, and they don't have to invest as they are now forced to with fiat.
Yeah, I think on that first part of the question, I was very similar. So I had a whole load of workplace pensions that I consolidated into one account that I could make choices over into the stocks and shares that I wanted to buy. And me being an accountant and loving spreadsheets, I built a Google sheet that tracked the daily movements of all of those, and I was my own fund manager effectively, and was keeping an eye on all that. And at that point in time, I was still dabbling with some altcoins as well, because my mindset at that time, say 4 or 5 years ago, was more about Bitcoin, and crypto was more a means to an end to get more pounds. But it's exhausting. It's absolutely exhausting. You get your fingers burnt because you buy a stock that you think could go really well, and it does, but then it gets liquidated, or, it's so hard to keep track on all of those things. And I would see names that pop up in my spreadsheet as the biggest gainers or losers on the day. And I'd be like, why did I buy that? Well, yeah, I don't even remember what that company even does. And yet I'm a shareholder in it. It's completely ludicrous. And I think as I got further down the rabbit hole with Bitcoin, I simplified a lot of those things. And firstly, I sold all my non-Bitcoin crypto to get more Bitcoin. And thank goodness I did that. I also massively reduced the amount of individual stocks I was buying, and bought a global equity tracker, which just has very low fees and tracks the market. So, you ride the wave a bit of what the market, well, you literally map the market rather than trying to beat it, which is almost impossible to do, and is impossible to do on a long-term basis because no one has ever done it really. And then, of course, the wonderful MicroStrategy, as it was known then, or strategy as it's known now, kind of reared its head. So as I became more orange-pilled, I thought, well, I should put some of my pension into strategy, and clearly that's been a good decision. So although I can't access that until I'm 57, with the current rules in the UK, I can access those funds when I'm 57. But again, it helps with the long-term mentality or approach that it's locked away. I can trade it if I want to, but I can't access that money. But being in strategy means that I've got at least exposure to Bitcoin in my pension that otherwise I couldn't have. Unfortunately, in the UK, you can't have ETFs at all. The second question about whether people, when Bitcoin is identified as the best savings vehicle, I think it is now by people that understand it. The trouble is there are too many people still believe some of the FUD, or aren't prepared to put in the work to really understand what Bitcoin is and the benefit it could give them, even as a small amount of their portfolio. So, I'll often have conversations with people who say, "Yeah, but I'm too late," or I'm not sure I'm risk averse. I'm a bit risk averse. I don't. And the two things I'll say to people is, if you contribute to a pension every month, or you're looking to buy a house, you're buying at the top of the market there. Your pension contribution every month is buying shares in Apple, Nvidia, etc., that are probably at or close to their all-time high. If you're buying a house, it's probably the highest that house has ever been in value. So the only reason you wouldn't want to buy at an all-time high of an asset is if you think it's going to crash to zero. But if you understand Bitcoin and see the history, then don't worry that you're buying at all-time high if we are there, because if you plan to hold it for 5, 10, 15 years, it's not a problem. All-time high now is going to be a blip at the bottom left of the chart in 5, 10 years' time. I think the biggest challenge we've got is just trying to, in a non-evangelical way, try and just encourage people to do their own research. The biggest problem I have is I'm too passionate, I'm too evangelical, and often it scares people off, or historically I've not always gone about it in the right way, but I'm learning and I'm trying to change my approach.
Orange pilling is hard. You discover this thing. You're so convinced of it, and you're so passionate about it, and then you meet someone that is at zero. Like you are at 100% conviction, and they are like, oh, like what is Bitcoin? I'm at zero, and you're trying to get him in with like one conversation to like 80 or 90%. But it's probably way better to get him in the first conversation just to like 1-2%. And when you meet him the next time, like let's get him up to 4%. I even like, I don't know if it's a good strategy, but I do it, when I meet friends and they haven't been in Bitcoin, and they just, say, stuff that is just not true on Bitcoin, or they're like, having some interesting or weird opinion on Bitcoin. I try to decide if I even want to tackle that. If you want to tackle all the small things that they have around Bitcoin that are wrong, it's a long conversation, so it probably takes a week.
Yeah.
So I'm trying to focus on like, what's the big thing that we could talk about and could get him like from 2% understanding to 3% understanding, which we can then build on the next time. And super interesting, what happens is sometimes you get them from 2% to 4%. And then they do 20% themselves because all of a sudden they got interested in it. So I think that's at least what my small learnings from, like, I don't know, 20 to 50 orange pills in real life were.
Yeah. Yeah. And I think everyone moves at their own pace, and certain aspects of Bitcoin education land better with some people than others. So for some, it might be the money printing suddenly becomes, hang on a minute, wow, all this money printing is going on. That's killing the value of cash. That's, and that one thing could then quickly, to use your example, move them from 4% to 20%. For others, it might be the decentralization effect. Someone tries to go and take £2,000 out of their bank account, and they're being asked what they want to do with that money, and they're saying, well, hang on, it's my money, why are you asking me what I want to do with it? It's none of your business. And sort of thinking, and I remember Robin said it's decentralized and you can send it without needing permission, so wow, Bitcoin fixes this. So for them, it could be that aspect. I think as Bitcoiners, we have to kind of take people on the journey at the pace that suits them, but it's hard because everything in me wants to protect the people I like and the people I love, and I don't like to see them making let's not say financial mistakes, let's say suboptimal financial decisions, right? And it's easier to talk to people about ways they might be able to save on tax or get a better return on their savings, or save money on their, I don't know, car insurance or whatever it may be, that are kind of practical day-to-day financial things. But if you start to say you can put a large amount of your current net worth into this magic internet money thing, it blows people's minds.
They're like, why should it's too risky.
Yeah.
It's also interesting. You mentioned pension funds. It's hard for me to not see them as a pyramid scheme, or as a scam overall, with like locking periods and the contributions and stuff like that. How do you look at them?
I think it's like we discussed earlier. It depends on your age and how far you are into having a pension already. If I got to the point in my mid-40s where a reasonable amount of my net worth was tied up in a pension. So I have no choice. I can't get at that money. I can't turn back the clock and put it somewhere else. So at that point, and the credible option you've got is, how do I get exposure to Bitcoin in that pension? If I was talking to a 20-year-old right now, I think there's still value in it, as long as you're in a workplace scheme where you're the company you work for contributes a good amount. Because the other thing you can't underestimate is the tax benefit. So even if you believe that they'll become more tax heavy over time, and there's also maybe a risk that governments might apply a wealth tax to pensions, or worst case, take them away from you altogether. I mean, that's a bit conspiracy theory, but it's not self-sovereign. You are relying on the rules that are in place to still be in place when you retire. But because of the massive, if you're a 40% taxpayer, which in the UK you are if you earn over about £50,000, then the amount that you save by contributing to a pension, because effectively it goes in as your gross salary, you don't get taxed at all on the amount that you put into your pension. And if you then invest that in MicroStrategy, you're effectively getting strategy shares at a 40% discount than if you just bought them in a general investment account. So still, for me, it's worthwhile to have an element of that because of the tax benefits I get on the money going in right now. I'm effectively getting more MicroStrategy for my money. And, because I'm saving the tax. If I just get paid a salary and buy spot Bitcoin, I don't see that tax benefit. But I think it is a decision an individual has to make, because clearly spot Bitcoin in cold storage, that's the purest way to be self-sovereign and have control over your own destiny and your own finances. But whilst these things are still being dangled in front of us and there are still opportunities, or if people are already committed to a large pension, then the question becomes, are you invested in the thing you really want to be invested in? Or should you be selling some of those shares to consider companies like Strategy? Or if you're in America, your pension fund, you can put it all into to IBIT, BlackRock, Bitcoin ETF, and okay, you've got fees associated with that, but it's probably still going to outperform any other general fund that you might invest in.
And the view of it also depends on your age is good, because if you are now, I don't know, like 5 or 10 years away from getting something from your retirement or pension funds, it probably doesn't make sense to opt out of that. But it's a different question of if you are like a 20-year-old and you are now trying to decide if you're even opting in those things, and then having Bitcoin as an option. It's a whole different set of this decision that you can make, and it's super interesting for me also how the current generation, and I'm wondering if this is a general theme around the world, or is it just Austria? Probably not. Where people are saying, I don't think I will get a pension. So the current generation, it's even the non-Bitcoiners, they're saying I'm very doubtful that I get anything from my pension at all, and I'm well aware of that, and I'm trying to plan for that. They sometimes don't plan with Bitcoin, but I rarely meet someone of course I will get my pension in 6 years time. So we all really kind of accepted that.
I think it's worth distinguishing between the two, though. So there's a personal pension is a pension that you've contributed to individually that has your name attached to it. A state pension, we call it in the UK. I don't know if that's the term that would be used in Austria or elsewhere, but effectively the government paying you an amount of money when you retire. At my age, I can't get that until I'm 67. So I'm almost 20 years away from getting the state pension. My view is by the time that comes round, it will either be means tested or it will be a fraction of what it is now. And, there is zero part of me that is relying on that for any element at all of my retirement. And I would say the same to anyone, particularly, again, younger people. So do not put any hope into the government helping you retire at an old age, because the system just can't afford it in the current state that it's in. and the numbers aren't very big anyway. So if you want to be financially free and financially secure and stop working or reduce your hours at an age and at a time where it suits you, then Bitcoin is a great way to do that, I think.
I think so too. Yeah, absolutely. One last topic that I want to touch on is the Bitcoin and how it changes lives. How did it influence or change your life?
It made me much less materialistic, actually. And maybe it coincided with getting a bit older anyway, and kids growing up and things. But I used to care about what people thought about me in the sense of I wanted a nice car, designer clothes, all that kind of thing to project that I have been a success. I am a successful person. Honestly, I couldn't care less now. I'm not. I don't really care what people think about me in that sense, not materialistically. Much rather care what people think about me as a human being and what I contribute to my friends and family, rather than hasn't he been successful because he's got a nice car. I had quite a long bout of long COVID in sort of the early 2022, and I think that also was a trigger that really made me reevaluate what was important in my life, and that I was on this earning treadmill, which was keep trying to get a promotion, keep trying to earn more money, and just keep doing all of those TradFi things that we spoke about earlier. And I think having that bout of quite severe illness and, if I'm honest, pretty much a mental breakdown, just made me completely reassess my life, my outlook and my future, and think so much of what I thought mattered really doesn't. And health and happiness and all of the things that come with health and happiness mean so much more than material things.
That makes a lot of sense. And I see actually a lot of people, a lot of Bitcoiners going through a similar journey. And it's always hard to see like how much of that influence was Bitcoin and how much of the influence was just the world around you. It's also a question that I struggle a lot with because I'm in Bitcoin 5 years, from 21 to 26. 21 to 26 is a quite transformative time in any human's life. So it's hard to say like, okay, well, what did come because of an environment change, of work, of girlfriend, of Bitcoin, of like what is the influencing factor on your own personality for that? It's almost impossible to say. But I do think Bitcoin puts the right incentives and the interesting framework around daily life to make things easier. Not easier, but for lack of a better word, I say easier. Maybe more guided in a better direction, maybe also. Really cool. We have one question that I ask each and every one of my guests, and the question is, what can we learn from you besides Bitcoin?
Kombucha. Do you know what kombucha is?
If I had to guess, is it that game that you throw a small ball and then like big balls after it?
No, it might be called something else actually. It probably isn't. It's a fermented tea drink, kombucha. You're busy typing it in now to see if you can see what it is. It's I stumbled across it when I had long COVID as kind of more holistic ways to try and recover. There you go. And one of the approaches to improving long COVID is the link between gut health and overall mental and physical health and well-being. One of the things that is meant to be really positive for maintaining strong gut health is fermented food. So things like kombucha, kefir, sauerkraut, kimchi. The one that really resonated with me was kombucha. I started making my own, and I love the process, the complexity of the process of experimenting with different teas and different methods. I love the flavor of the kombucha, and I loved how it made me feel. And I did honestly think it was a large part in my recovery from long COVID, both I think physically restoring my gut health as well as the mental focus that gave me at the time. And because I'd been so unwell, I'd left the previous job that I was in because I just couldn't do that job anymore. I had no energy to my work life, my home life, and my mental and physical health were all just really suffering. So the only one I really could bin was work to focus on the rest. And an entrepreneurial friend of mine said, start up your own business. Just start making and selling kombucha. So I did. And I now, as a little hobby side hustle, I brew and sell locally to friends, family, friends of friends, people that have stumbled across my website or heard about me. And it's fantastic because other people that have been in similar positions with brain fog and some of the other side effects associated with long COVID or chronic fatigue syndrome, whatever you want to call it, have found that it's really helped them. So everyone should brew their own kombucha. It's a fantastic thing to do. It tastes great and it's really good for you.
Is it difficult to do that?
No. You can buy a starter kit. You can either get a starter kit from someone, if you can find someone locally that does it themselves. It's a bit like the process of doing sourdough bread, where you have a starter and you keep that starter going. Effectively, once you've brewed your kombucha, a proportion of the kombucha that is that final brew goes in to start the next brew, and you just top it up with sweetened tea. Cooled down sweetened tea is all that goes into it. And the bacteria and the probiotics convert the caffeine and the sugar into more healthy probiotics and bacteria. And it's a slightly acidic, slightly vinegary, tart taste with elements of sweetness. And it doesn't taste like tea at all. It's it's amazing. I love it.
Really cool. I have to try that out somehow. Perfect. And thank you so much. We have an entertain, as you know, in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. As always, it's an interesting one. If you could ask Satoshi one question, which one would it be?
Oh man, that's a horrible question. As you said that question out, all I can hear in my mind are thousands and millions of more educated and informed Bitcoiners than me saying, why did he say that? Why did he say that? I think I would say, where would you want Bitcoin to be in 20 years time or 30? Where do you see the future of this going, and how fast would you like it to get there? Because clearly all of the aspects of what make good money, Bitcoin ticks all of those boxes. It's been covered to death. We don't need to touch on it here, obviously. But I wonder to what extent Satoshi had a vision for how other elements of life and would change and evolve over time, and whether how visionary he was, or whether he was just a purist of this is what good money is and all good things can flow from that, but didn't give it too much thought.
That's a really good one. I like it. It's super interesting to think about what questions you would ask Satoshi. Like if you're like having Satoshi as a podcast guest, like what are the directions you want to go with that conversation? What questions you want to ask him? And I actually thought about that a lot, but it's so hard because you can go down like 20,000 different avenues with that conversation. And it would be so interesting to know, even if he's a really bad speaker. I think it would be so interesting to listen to it and see what he actually thought when he made Bitcoin, and how he looks now back at the Bitcoin time and through different developments, like asking about the block size war and different interesting avenues where we just go for, which is where we went in Bitcoin, and where there are forks in the road of the Bitcoin development. Oh man, I wonder
if Satoshi would look at where we are now and think we're ahead of where he hoped we'd be by 2025, or whether we're slightly behind where he hoped we'd be. Again, it's interesting to think about that, because on one hand, so much has happened, even in the last 6-9 months, with strategic Bitcoin reserve and everything going on in America. But maybe 16 years ago, he thought we might be in this point 5 years ago, and why is it taking so long? It's fascinating. It's good, very good question.
Satoshi comes back and says like, "Oh, what the heck are we doing? We are not at a Bitcoin standard yet."
yeah. Why have we got so many podcasts? Why aren't Bitcoin podcasts a thing of the past now? And it's just, it's just everyday life.
Yeah. Why isn't Bitcoin boring yet?
Yes. Yeah. Good.
Really cool. Thank you so much, Gary, for being on. Before I let you go, where can people find you, ask you questions, and reach out to you?
I'm on X at SmithyG. I think I might just need to double check that. And I've just started my own podcast called Bitcoin and Me. So yeah, if anyone, I'm really just interested in talking to people about their Bitcoin journey and a bit of the history of their association with money and how they deal with that psychologically, emotionally, rather than getting into sort of technicalities and current news and topics around the Bitcoin space.
Really cool. Thank you so much, Gary, for being on. Also, thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.